I mean, there's two things. One is tactically what this partial deal is, and then also what it represents. And, you know, less than 24 hours ago, I was fielding calls from institutional investors, you know, asking me, what the heck is going on? Why is China leaving early? If you remember, late Wednesday night, there were rumors that the delegation might be leaving before today. And so what the market really wants to see, what investors want to see, what I want to see, is a de-escalation. And I think that's what we're getting today. So, you know, regardless of exactly how this de-escalation comes together, I think it's meaningful.
It's funny, Eswar, because this de-escalation could happen in the form of the partial deal, but there are all sorts of issues surrounding the trade war and the surrounding trade negotiations that have been an escalation going into the trade war. So, I mean, ultimately, do we really see a de-escalation in terms of the tension between the two countries?
I would characterize it as a lack of escalation rather than a de-escalation. So it's not that any of the existing trade measures that the U.S. has imposed on China or the other way around are coming off. It's just that new measures are not going to be put in place if, in fact, there is a deal, which we'll have to wait and see. But what the markets seem to be taking is that the lack of bad news is in some sense good news. But the deal, or what we are hearing about the elements of the deal, certainly don't point to any substantive de-escalation, and they don't deal with any of the key issues that have been generating economic and trade frictions between the two countries. So there is a long way to go if one really wants to talk about there being a good basis for markets to rally because China and the U.S. Are pulling it together into some sort of deal.
So, Eswar, what is China giving and what is the U.S. giving?
What it sounds like China is giving is agreeing to buy more goods, especially agricultural products from the U.S., perhaps agreeing to keep the value of its currency stable, so not using currency depreciation as a tool to fend off the effects of the tariffs on its own exports, and perhaps some market opening measures. What the U.S. might give, according to the reporting we've seen, is perhaps easing back the restrictions on sales of equipment and technology to Huawei, and perhaps a few measures related to allowing Chinese firms to operate here, continue being listed on stock exchanges, and so on. So it's really a very de minimis deal on both sides.
So, Stephanie, how does that set up for the next round of talks, which could be much thornier?
Yeah, I mean, they always talk about how they left, you know, they got 95% of the way there, and the last 5% is what really created obstacles back in May. And of course, the last 5% is always going to be the hardest. I think what we need to see, though, is room for the leaders of these two countries, whether Trump and Xi or their senior negotiators like we saw this week, to be able to come to the table and make progress. So I agree that basically a lack of an escalation maybe is a better term. But I do think that we could see a complete de-escalation and a complete deal come together before the end of the year. I think, you know, to bring in more politics, I think impeachment absolutely pressures the president to need a win. I think economic pressure pressures the president to need a win. I think there's a lot weighing on Trump here right now.